This is Jean Armendariz Kerr, and I'm the broker owner of Mode Realty Network, and I'm here today with Bex Laird from Goosehead Insurance, Laird Agency.
Hi.
Why don't you tell us a little bit about your firm?
So Goosehead is the nation's largest brokerage for personal lines, which is home, auto, etc. But I have a local agency, so I am able to be kind of like a national broker, but with a local knowledge and touch. In a nutshell, that's what it is. We have a lot of companies, and we're able to get the best coverage and price for each individual situation. So it's very compatible as people change and grow and need different coverages.
Awesome. So why don't we start really basic, and why don't you tell us why somebody would want insurance to begin with?
Well, insurance, if you think about society, is one of the ways that keeps us going as a society. It keeps society from being destroyed. So it really creates a generalized risk over the entire planet. So if something drastic or horrible happens to one part, we're not really at a loss forever and ever in that part of the world. We take that risk and we transfer it across. So it's actually just a way to keep people afloat. And then individually, why you would do it is to cover your assets moving forward and make sure that the wealth that you're building is not lost in the event of an accident or for being sued for whatever reason. So you want to protect the assets that you have and your future assets.
Excellent. So first of all, what types of insurance do most people need?
Most people would need some sort of home insurance if they own their home or rent their home, and then auto insurance if you have an auto. And then most people should actually have an umbrella, which adds an additional liability coverage over your home, auto, or whatever risks that you have that include a personal liability aspect.
So understanding that insurance covers you when something catastrophic happens, can you tell us a little bit about the process from the moment, say, you have an auto accident or maybe a hail claim?
Sure. So with auto accidents or anytime you're on the road and something happens, I tell my clients, whatever you do, go to the back of your insurance card and call that number because they have immediate assistance available for you in the event of a sudden accident on the road. If you have hail damage, as a broker, I handle most often my clients' first touch with that. They text me or call me and say, hey, this is happening, what do I do? There's a couple of things that you can do. It's best if you have a relationship directly with the carrier to start a claim there because eventually you will have to, as the client, talk individually with the carrier. I won't be able to talk for you. But I can also help get that claim started for anybody needing additional assistance or if they just like that extra touch. I'll accompany that process, but I cannot really take the place of you during that process.
And what would be the pros and cons of making a claim?
Well, you have a deductible, so that's the amount that you would pay prior to the insurance company paying, and hopefully that deductible is reasonable for your pocketbook. You want to evaluate whether or not the damages and what you might get from the insurance company and minus the deductible is enough to really make it worth making that claim. But you would want to make a claim to be able to be made whole in the event of a catastrophic hail damage, tornado, accident where the damages are a lot of money. And that's, the purpose of insurance, so you're not spending your own money on that at the time.
And is there a downside to making a claim on a relatively smaller amount of damage?
Yes. The downside to making a claim, if the damages aren't going to be a lot of money, is that you have a history of making a claim. So your premiums can increase, and then if you're in a shopping experience for insurance, that will definitely affect the experience. And that depends on what the nature of the claim was. If it's a catastrophic claim, that tends to affect you less in terms of a premium increase than maybe a water damage that was because of something in the home, a faulty refrigerator, water line, or something that should have been maintained better. So yes, there are always downsides.
So what about the difference between your home inspection, a home warranty, and homeowner's insurance? Do you think that if you are getting homeowners insurance, you don't need a warranty, or you don't need an inspection, or how does that work?
Well, there are three completely separate things. So let's start with the home inspection because that's what you generally do right after an accepted offer. That tells you the condition of the property at the time of that inspection. That helps you and your realtor make decisions on how to move forward with that deal and what might need to be done to the home prior to close or even after for maintenance issues. So your home inspector is going to teach you all about how to maintain that property in addition to telling you what the condition is. Sometimes included with the home sale, you get a home warranty or you'll buy it later, and that generally covers your appliance and mechanicals like your furnace and water heater and things of that nature for about a year after the sale of the home or every year thereafter if you renew. And a home warranty doesn't necessarily connect with the inspection so much. The inspector might tell you the age of your mechanicals, and so you might feel more comfortable getting a home warranty if you have older appliances or an older furnace or an air conditioner that might be on the last leg. So a home warranty will give you some peace of mind in moving forward that you won't be putting out a ton of money if something drastic should happen. And then we have home insurance, which is contingent upon the sale of the home or the purchase of the home. That usually never includes a home warranty aspect, but they do have an endorsement called equipment breakdown. I don't know if you've heard of this before. When I'm describing the difference between a home warranty and equipment breakdown on a policy, they're similar but vastly different. A home warranty will pretty much protect you, your appliances, no matter how old and whatever condition that they're in. They usually will give you some coverage or they'll send out someone to fix it or try to. Equipment breakdown coverage on an insurance policy will usually covers between $50,000 and $100,000, and it's good for appliances or mechanicals that are relatively new and in good condition. So it's not going to do anything for the person who has very old things. I say save your money and then invest in some good appliances, and then when you do, we can put that coverage on. The other difference is in price. A home warranty, you're probably a better expert than me. I would say between
$600 to $700.
I was going to say between $400 and $500. Okay.
Yeah, they've gone up.
Right, and there's a reason for that because no matter what the condition, generally something is done. On a equipment breakdown endorsement, that's about $40 a year for that, but it only comes into effect if there's a sudden issue with mechanics or electronics and things that otherwise would not have had an issue. So it's similar but very different in about every aspect.
So you'd say that essentially for your insurance policy to kick in, it would require sort of a sudden, more catastrophic, unexpected breakdown, not necessarily something that happens just as a matter of course from age.
I have a lot of questions with new home buyers especially who ask, will it cover, my roof is older, will insurance give me a newer roof? No, they will not. Welcome to home ownership. We all have to maintain our homes, we all have to replace things that are old. Insurance is meant to take effect when you don't expect something to happen, and it does. And that's why it's kind of an economic savior, and we hope, that's the goal.
So one of the things that newer consumers who've never bought home insurance might not know is that your homeowner's insurance can sometimes cover personal property or other things that aren't necessarily attached to your house. Can you give us some examples of that?
Sure. So my visual for that is if you took your roof off your home and turned it upside down, shook it, everything that comes out is your personal property on a home policy. So examples would be sofas, your clothes, TVs, anything that moves essentially. Not your furnace generally, but yes, your appliances generally. So things of that nature, anything personal.
Now I understand that potentially one can purchase riders or endorsements. Can you explain a little bit what that means?
Sure. Well, a home policy comes essentially in, I want to say, 5 basic coverages: A, B, C, D, E, and F. A is your main structure. B is anything that's not attached to the main structure but is on the property itself. C is your personal contents, your stuff that's shaken out of the house, and D is loss of use if you cannot live in the home. They give you some money to live elsewhere generally. E is your liability, and then you have deductibles and whatnot. So after that, we have all of our endorsements and riders, which I think of as interchangeable. It's a synonym. That just means extra stuff that you want on your policy that isn't included in the general policy. Probably the most important things that I generally insist upon is some protection for water backup, and then utility line or service line if you are not on a well and septic. And that's because what people don't tend to know is that insurance policies have relatively weak water protections in and of themselves. They protect from rain that pretty much comes, from above and in a storm, and then sudden breakage of pipes that otherwise weren't meant to have broken. So they're not old, they're well maintained, something happens, something sudden and unexpected. Those are your basic coverages on a home policy. Sometimes you'll have carriers that will do a seepage or some lateral water, but most carriers do not. That's a separate policy. It's called a flood policy. So what we try to do is make the policies the most robust that we possibly can. And that includes making endorsements. And so one of them is water backup. Anything that goes down a drain can come suddenly and sometimes really grossly back up the other way. And so we want something so that if you're standing in a couple inches of sewage, you've got something for cleanup. And then service line is if you have your foundation and then you have the edge of your property, the lines that go under your yard between the edge of your foundation and the edge of your property when you're on a municipal water and sewer, those are not ever protected normally on a policy. So we want to make sure that, especially if the home is older, we can get some coverage to dig it up and see what's going on. And that covers, of course, sudden breakage. If it's a maintenance issue, no.
Okay. So what about properties that have special or significant and unique potential issues? For example, properties located in a floodplain, or if somebody does want that lateral flood insurance.
Yeah, I love unique situations. That's one of the reasons why I got into this business, is because we're all people and we do all have unique situations. So there's flood insurance, and there's generally two types. There's private and public. I do both, and if you're located in a floodplain and your insurance is mandated by your mortgage company, then that's generally going to be more expensive. If you're quote unquote not in a floodplain like flood zone X, which is the least likely to have a flood, you should have flood insurance because of those lateral issues. And we're all coming into climate change. It's weird, but it's going to be a lot cheaper, like a quarter of the price. And so that's actually the best time to buy it.
So even if you're not in a floodplain, you can actually purchase flood insurance even so.
Yes, you should.
And how about our older home stock? One that we run into all the time would be knob and tube. What can we do about knob and tube?
Well, there are a couple carriers that will take it, and a couple like up to 10%. So if I'm looking at a house and I can tell it has plaster walls, and even though it's been somewhat redone, I can tell that the house has not been gutted, I will just automatically add, yes, they probably have 10% knob and tube for certain carriers, and that's just taken. It's not really that much more expensive. But if you have a house that has a lot of knob and tube or an issue, that's an underwriter decision that we have to get permission to put on a policy. So sometimes that involves telling the carrier, hey, there's an issue. Maybe they're going to put it on a policy that's less robust until that issue is taken care of. You might need a signed contract with an electrician, maybe a down payment, but that's a conversation. It's not a policy that we're probably going to be able to get in an hour. There's going to be a couple days, there's going to be a little bit back and forth, but you can get it done.
Cool. So what about, we know as professionals that there can also be differences when the occupant is different. So for example, renters insurance or landlord policies or vacant home policies.
Mm-hmm. So vacant home policies, they're rated differently, and there are certain carriers that will take them and certain carriers that won't. Renters policies don't cover the structure themselves, but they cover your personal contents and liability, and some can cover your liability towards your landlord in the event that there's water damage or pet damage that you do. So there are some extra coverages for that. but it's not concerned with the overall structure of the home. Landlord policies, of course, are concerned with the overall structure of the home and the liability. They're generally more expensive because the owner-occupant of a home generally takes better care of that home than a renter would. And the risks are just different. Renters, you don't know who's coming over necessarily. So those are going to be more expensive, and you're going to have more liability coverage, hopefully, than you would otherwise. And then there's another category of owner-occupied homes that do short-term rentals like Airbnb. Those are now becoming more popular, so another endorsement, a possible endorsement, is that. But you want to make sure your agent knows, make sure that your insurance company knows what you're doing, because if you are taking money for Airbnb or otherwise have a roommate situation and you don't tell your insurance company that you're doing that, they're not obligated to cover any liability or damages for that extra risk. So probably the most important thing is telling your insurance company and your insurance agent what's going on in your life.
So on that front, how long do you have after you've moved out of your house before you should really switch to a vacant house policy?
Generally, it's about 30 to 60 days. If you are not going to move in for that amount of time, or if you're going to leave a home vacant, that's probably what we would recommend. It differs between carriers, but I would say 30 days.
What about if somebody is going to be building a home? Do they need special policy for that?
Yeah, it's called builder's risk. There's two ways generally you can do it. Straight builder's risk policies, it's just they call it a one-shot policy. You pay a certain amount of money. It's usually good up to a year, but you can get them for less amount of time, maybe 6 months. And then no matter how fast your builder builds, you're going to pay that amount. The other way to do it is to get a home policy based on the future, what that home is going to be, with a builder's risk or a construction rider on it. So there are certain carriers that will do both, and then you would simply take off the builder's risk portion, and the homeowner's policy would kick in when the people are back in. Generally, for those policies, you have to have a vacant home. They won't do both.
So I know that you are very knowledgeable about homes. So are there any red flags that either prospective homeowners or their agents should be watching out for when it comes to homes that they're looking to purchase?
I would say, especially for the first-time home buyer, you want to know the age of a roof, especially with composition shingles, and especially if they're not architectural shingles. So the maximum age that an insurance company would like to insure a roof is 20 years if it's just got regular shingles on it. After that, it becomes a little more expensive and a little more thorny. You might not get replacement value on that roof, or you might have an issue where they're not going to want to take that roof. So I like to know up front those kinds of issues, because we can find a policy in a carrier and say, hey, we know this roof is a little older. We know we're going to have to replace it, and we're going to insure it that way, because all insurance companies send around in secret an inspector. So no matter what we say up front on our application, they're going to verify that. Because if you think about it and you say, hey, I'm going to pay you $70 a month, in return, if anything happens, you're going to buy me a whole new house, you can bet that you're going to want to evaluate what that is. So they do satellite, in person, sometimes an app on your phone, and it's a self-inspection. They're all looking at what that really is. So if we say, no, the roof looks great, and they say no, then that's a more dangerous position to be in, because when you enter into a cancellation, then I have to go and shop it around as a cancellation, which is, it's a red flag for everybody, and we have to explain it a lot more.
Can you share with us a little bit about some of the sources of information you have on properties?
Sure. A lot of it's automated these days, and a lot of it actually comes from the carriers themselves. All carriers pay a lot of money to get data from a lot of sources to figure out what your house looks like inside and out. And so I can use carriers themselves to figure out those things. There's another thing called a clue report that just tells you kind of, have there been claims on the property? Are they still open? Are they closed? How much were they for? And of course, what the claims were. So those are sources that I use. Sometimes I use permit data if I can get it. I've even gone to places that aren't online, because some carriers will offer really great discounts if you can prove that an older house has had like a whole new plumbing renovation. So sometimes I'll go to that length to do that. But so basically it's the inspection, of course, I'll ask, what did your inspector say about this roof? Because I can't really tell, and the insurance company is going to tell, so we want to know. And then the carriers themselves and see what data they have popping up. And then the clue reports that we get back from the carriers. We have to run an actual quote to get a clue report, but then we kind of have an idea of what's happened. And then permit data from the municipalities, if we can. Those are probably the biggest things.
Are there any things that you think real estate agents should know or watch out for, just as a matter of course, that they generally don't?
Well, I'm going to throw that back in your lap because agents are savvy, so I want to know, like, what have you come up against, and then I'll answer.
So some of the things that we know we run into fairly frequently are things like older roofs and how to tell, but things like knob and tube wiring or Federal Pacific electrical panels, but perhaps how to determine when something is near a floodplain, or perhaps that an estate might be treated differently.
Mm-hmm. Well, the floodplain issue is pretty easy. I do flood maps and flood determinations. I'm able to get that for anybody who wants it. There's no requirement to do a quote to get that. So I try to get that for my clients, and I'm sure other agents would too. As far as knob and tube and whatnot, we've sort of covered that. It is insurable, to the best of our ability. It's a case-by-case basis, but we get it done. And then other things like, actually, we've talked about the roof and what you need to look out for. If it's an older roof, just make sure the client knows that they should let their agent know, so that we can account for that when we're doing the quote, if we can't always see. Because when I look at a house, well, first thing I do is I look at the photos online and to see what the condition is. But those online photos tend to be like the best photo. They're like glamour shots for the house, really. So that doesn't necessarily give you the accurate picture of what the condition of the roof is, or the back of the property, or whatever I cannot see online.
So you would say maybe an agent could be helpful by sending you the MLS sheet with all the photos?
They could be helpful doing that, or just letting me or the client know to tell me what the actual condition of the roof is, what the inspector said. Did the inspector say it's got 10 years of life left, or 6 months, or that it's kind of like, it's going to be a defect? We can get insurance for that. We just have to know ahead of time. So, and an interesting thing would be historic homes. So if an agent knows that a home is historic or rated commercial, like sometimes there's mixed use, that's an essential thing for me to know. If I don't catch it and I haven't been told, the underwriters will catch it. Some carriers don't want that risk. And so we would have to take it out, cancel that policy, and get a policy that with a carrier that does take that risk, and they're usually more expensive. The reason is because when something happens to an older home, generally speaking, when you rebuild it or repair it, if it had plaster, for example, you're probably not going to need to put plaster back. So you would use drywall. That makes it cheaper to repair. If you need plaster, or if there are going to be neighborhood or municipality requirements that would require you to repair something in the way that it was, it's going to be a more expensive repair, and therefore the insurance premium is going to be higher to cover that.
Very interesting.
Mm-hmm. So, like, what are some things that home buyers should know that they don't maybe they're not aware of? Because nobody wants to be aware of insurance. That's kind of the point of insurance, but at the same time, we need to be savvy about it a little bit. So sometimes I'll get phone calls like from a home buyer. I just want a home quote, and I'll say, can I get a birthday or something? No, I just want a home quote. Here's the address. That's not how insurance works. They need to establish a financial history for someone. It's not a credit pull, so we don't pull hard credit, but they do all carriers want to get a picture. And so they usually need at least your name, your birthday. If you're married, spouse's name and birthday. That's for discount purposes too. And then your current address, and then the address that you are looking at purchasing. And that's just to see who you are. And then after that, we can get into more specifics of a quote. Another thing that maybe is very counterintuitive for a home purchase situation is looking at your auto insurance. So I'm an insurance agent. My goal is to mitigate your risk and help you move through life's hard times as much as possible. And that's looking ahead. So when you're about to buy a huge asset, and in this market, you probably, upon close, have some equity in it aside from your down payment. So you're already up in your equity. If your auto policies are at state minimum limits for liability, let's say it's $25,000 per person, how far does $25,000 get somebody if there's an accident and they have to go to the hospital and there's some, damage to them? About half a day, probably. After that, they come for your assets. So if you're in this purchasing situation, I want to know, of course I want to sell you an auto policy, but I also want to make sure that you're covered on the policy that you have. So if we're not able to sell you a great policy for less or same or make a bundle that makes sense, I'll at least say, stay with your policy, but tell your agent that you need to go up in your bodily injury limits, because it's my duty to work for your best interest, and that's to tell you that. So that's counterintuitive. The other reason why you want to look at your auto policies and your renter's policies is the more insurance you have when you're in a shopping experience for insurance, the better off your financial score will be for insurance. So they try to calculate responsibility. If you've had a renter's policy, that's somebody who thinks about liability and thinks about taking care of their stuff. If you have higher bodily injury liability limits on your auto policy, to an insurance company, you're somebody who thinks about third party, like what happens if I get into an accident? I want to make sure I'm covered and the other person's covered. That creates a better score. So that's one thing, a trick that you can do prior to or during the home buying process that can actually help you out financially when you're actually getting home insurance.
That's really interesting. And one of the things that might be on people's minds as they're shopping for insurance is that there can be a really big swing between two different quotes that they might get. Can you talk a little bit as to why one might be lower, one might be higher, and what the differences might be between those policies?
Sure, there's all sorts of reasons. So the first reason might be that when you're just in a quoting frenzy, and if someone calls and says, I need a quote, that agent might quote that with all of the discounts added, regardless of if they're going to end up in the final policy. So you might be getting a primo quote that is a lot less than it actually will be after the fact. So that's one reason. The other reason is it might be on a different policy form. So even though we have a homeowner's policy, there's 3 homeowners policies, essentially forms for single family homes, and then one for condos, and then you have one for renters. But it might be on a lower kind of a policy that covers less perils or different perils. So you have to look at that. The coverage the coverage for the house itself might be less. There's a lot of things that you look at in terms of coverage. So when someone comes to me and says, I got this price, my first question is, I need to see what that quote is, because my quotes include endorsements like water backup. They include service line. They include the highest liability that I can put on that policy depending on the carrier, because I max those out for all my clients. I want to see what that is so we can actually compare apples to apples and then make sure that the discounts that we know will be there, like if there's an alarm in the house, it's going to be a discount, but I'm not going to add that discount to a quote before I know for sure what's going on. So there's lots of little nuances that would create a difference in quotes. So don't just go on price. Ask to know what's behind that.
I know I have seen some ads on TV, for example, that talk about accident forgiveness. I'm assuming there's something kind of like that for homeowners as well. Is there a downside if you've made multiple claims, for example? Might it impact the policy that you pay or the premium that you pay?
For sure. I mean, even in a shopping experience, if a home on a clue report has had 3 claims, I have to talk to the underwriters and tell them what those were and why and what happened and how much if they don't know. So, of course, it affects it a lot.
Does the reason for the claim change dramatically? Like, for example, if somebody is a landlord and a prior tenant was the reason for a claim, and then you have a different tenant, but you have to make a different claim, do they differentiate between that, or is it really just same property, another claim?
On a landlord policy, to my knowledge, it's just same property. It's property owner. So it doesn't have anything to do with the tenant. They're not going to have that information necessarily, and it depends on what the damage is. But some if it's a tenant caused like a vandalism, that might not even be covered on a landlord policy unless you put vandalism coverage in there as an endorsement. So yes, and of course, if it's a catastrophic claim like hail or tornado that has nothing to do with our behavior, that's going to rate less in terms of your future shopping experiences. If it's behavioral, I should have maintained my water heater. It's 25 years old. I wanted to get another year out of it. It bottomed out. That's my behavior that caused that. Even though it's might be covered on my policy, it's still going to affect it in a shopping moment.
And how soon before the closing should somebody come and get their claim or sign up for their homeowner's insurance?
As soon as you have an accepted offer, you should get it. We can do same day insurance if we need to. There's a lot of emergencies where that happens, oftentimes because somebody got insurance from a company. They said, yeah, roof's awesome, whatever. That insurance company's inspector didn't get out into the property until the day of close, and then canceled. So that happens. That's why we try to avoid that as much as possible. But you should get insurance as soon as your offer is accepted, just because there's a lot of discounts that can happen. You're starting a relationship with your insurance agent. Sometimes you never know if it would take longer to do, if you have a knob and tube or something that needs to be done. And then you're just set. Then your lender's asking for that at least a month ahead of close. And that's one of the last things that they need to lock it in. They need to know what your final insurance number is going to be to set your rate, what you will pay a month if you have your insurance payments connected to, what is the better word for that?
Escrow. Yeah.
I know escrow, but I'm trying to dumb it down a little bit because a lot of people don't know what escrow is.
Yeah.
Bundled, if your insurance payments are bundled with your mortgage payment.
Thank you so much for coming today, Bex. It's really been informative, and we really appreciate your time.
Thanks so much for having me. And just so get to know your agent, tell them everything about you. We work on your behalf. We can find insurance for your needs, but we need to know what they are.
Awesome. Thank you so much.
Thank you.